Kadena, KDA has taken off just as anticipated. We got the setup in advance, we showed the entry, and now we're at a position where we're risk-free. But today, we're going to cover the A to risk-free. So not A to Z because the trade is not over yet. There's still some real upside potential. But today, we get risk-free, which means in the worst case scenario, you've bagged some profits and you can live to fight another day. And if it goes our way, we make great profits. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I used to only focus on currencies, well, Forex, but now it's all about cryptocurrency. So let's dive straight in. So let's do a quick recap. On Jan 13th, we identified the setup. It looks like an A, B, C structure. We drew a box with time, with price, with momentum. We said, look, if we reach this zone, we got a high probability trend reversal using something called Fibonacci and Elliott, which really allows you to read the psychology of the market. How's the market feeling in terms of fear and greed? Purely technicals, no fundamentals, purely technicals. And then what we said was this is the potential. This is still Jan 13th. We said the reason we're looking at KDA is if we do get a reversal, the next typical impulsive wave 3 are these two zones here, which is a 7.4x to an 11x. It was, well, we'll go into that. I think it was $44 to $63 thereabouts for KDA. But today we're all about this part here, which is, okay, we've got the entry set up. So this is now 10 days later. We're literally talking 10 days. This is important to note because the pros are patient. So this is where we did the first video up here. And then we literally waited for our setup. 1, 2, 3, 4, 5, 6, 7, 8, 9. It's around 10 days later before the setup was ready, before the momentum had reversed. So then we got momentum, pattern, price, and time telling us, okay, it's highly probable that we're going to see the price take off. Then what's happened? Bang, just as anticipated. Boom, it's taken off. Still early, but it's taken off. But the main thing is we projected this in advance, which means the price hasn't taken off yet. We spoke about on the 23rd what's a logical high probability, because we can only do probabilities, never certainties, entry position. And what we said was, now that we've got this momentum reversal, we can enter on a 1-bar high with a stop loss on the swing low. So if we're wrong, we lose this much. If we're right, we got upside, huge upside potential, but we want to be aware of this zone here to be risk-free. And that's what we're going to focus on today. So those that took action, great job. Hopefully you've been managing your position as well. But this is where we are pretty much as of yesterday. There's one more bar as of today. We're going to cover that as well. And again, just macro picture. When we did the analysis, we're going to do an A to Z. We're going to do this all again. Pretty punchy, pretty fast, but I want to show you that we did it in advance with high probability, with mechanical objectivity, no emotion. It was just ABC, literally ABC. And this is where we're going to focus today, which is all about this quote. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Warren Buffett, right? That's what we want to focus on today. How do we do that in a practical fashion? So let's now dive in. Quick note, I got a free Elliott Wave and Fibonacci Masterclass if you want to learn how to do this. If you like the Masterclass, you can buy my course. It's on a huge discount right now, but this is the course. We're going to use this information today to quickly just show how we got the setup. With Elliott Waves, it's broken down into bite-sized chunk, foundation, intermediate, advanced. I've just picked out the key things that you need to know. But then when we jump into Fibonacci is all about the price movements, the relationships. I'll break it down to 3 to 5 minute lessons, and literally you can use it as a guide. So you can just go, right, I need to go to a wave 2, and you just go to that section. Another thing, what we got now is normally $997. Right now is £97. So, we're doing a special promo at the moment. Take advantage of it. I think it's great, getting great feedback for the course. But what we're going to focus on is applying what's in the course. I've taken the date back. This is Kadena, KDA. Taking a date back to pretty much Jan 13th, where we did the first video. And I'm going to show you A to Z, but I'm going to do it quite punchy though. So I'm not going to do a long video. Well, I'm trying not to do a long video today. I'm laughing because I sometimes say that and then it becomes a long video. All right, so we're going to go here, look. We've got this nice wave. 1, 2, 3, 4, 5. This is what you call an intermediate wave count. So I'm just going to change this down here to intermediate. Bang. And then we've got this, what looks like what's forming at this stage, what we said was a nice wave A, a very clean ABC of a B, and then looks like a 5-wave structure. 1, 2, 3. Looks like some type of wave 4, and we should anticipate one more move down to the downside. That's literally what we said. Right now, we're just going to get rid of these lines. Keep the letters. Just going to get rid of the waves, just so we have a nice clean chart that just says, right, this is the Elliott wave count. Bang. Now, we're also going to just jump in here, and I did this in that video. I said this chart, we want to take advantage of this when it's this obvious. I say obvious, everything is difficult before it's easy, but with practice, like driving a car, it becomes more and more obvious. And also, just a side note, when we're playing the sport of crypto, right? You're playing the sport of crypto. We want to be emotionally neutral to winning and losing. There's going to be times it goes our way and times it doesn't go our way. We want to be emotionally neutral to winning and losing. That allows you to stay mechanical, objective, business-like, and not get too emotional. And that's one of the reasons why we want to get risk-free, which is what I'm going to show you today. So here we see this 1, 2, what looks like a nice wave 3, 4, and we anticipated in advance that we should see a wave 5. And this is a microwave count. Again, I covered this in the masterclass and the course itself. Course, I go into a lot of detail, right? But this is now what we're saying. And we do one other count, right? This is the macro now. Macro is bang. This is a 5 over what? Did you get a 5 over what? You go, what? 5 over what? It's a 5 over 1. This is the first major move to the upside. And the markets are always expanding and contracting. And this is a macro wave 1. Just going to make it as big as I can. Bang. That means down here is what we're anticipating is a macro wave 2. But I'll put a question mark because it hasn't been signed off yet, right? And we've got momentum indicator. I covered this in the course in a bit more detail, how to use these. It's called stochastics RSI, but I'm going to just zoom in like this. We can get rid of this now. Perfect. So we've done the Elliott wave section, right? We've done the Elliott wave section. I did it quite fast, but this is broken down in the course, how to do this step by step. Now what we're going to do, we're going to focus on Fibonacci price. So we've got the pattern recognition over here. We want to now go, okay, what's the typical Fibonacci ratios or the selling zones? What's the typical wave 2 zone? So I'm just going to pull up the course. This is really, really helpful. So we're going to go to Fibonacci. The foundation of Fibonacci is retracements, right? Retracements. Price retracements. What we want is less than 2. Again, I'm just showing you this because I want to make sure you know this is available to you. You don't have to be in the dark when you're looking at your charts. But this lesson, I break it down in a lot of detail. But the main thing is click the low, click the high, and you get 3 ratios. The 3 ratios are 50, 62%, and 78.6% retracement. So literally what we're going to do is in fact, we'll ignore the indicator for now, is we're literally going to take it from, we're actually going to use this as the low here, over here. We can argue, should it be here, should it be here? That's one of the subjective parts of Elliott wave, but it doesn't make that much of a difference for the retracement perspective. So we're going to use this low here, and I'm going to do it in line with the 1. It takes 2 clicks, click, and click, and it brings up these 3 ratios, and it allows us to change them as well, right? But these are the key 3 wave 2 targets. Now we can see we've already surpassed the first one, which is 50%. We're at the second one, but because this sequence down here, has done a 1, 2, 3, 4. Waves don't typically finish in 4, so you finish in 5. So we're anticipating one last leg to the downside. So what we said in the video is we kept both of these 2, right? But the probable is going to be down here, and you'll see why. Then we did something called alternate price projections or Fibonacci extensions, price extensions. This is in the course, but we won't go back into it here. The key ratio, I'm just going to show you, is 100% and 62%. And you see 62% is right in the cluster zone of the other 76, 78.6. So that gives us a very, very high probability. And we did a couple of other things, but this is enough information. We've now got clear pattern, and we've now got very clear price. And what we said was, we want to wait for the price to reach this price zone. So we're going to call this the zone. And if it does, on the next bullish reversal on the momentum, which is these lines down here, we will then look for an entry. So now we're just going to play out the data, right? So you go bump. So we got bearish reversal, momentum's moving down, but look, the price is moving to the zone. And I was reading all your comments, right? Because people are like, oh, it's tanking, oh, this, that, and the other. Look, we just stay mechanical over here. Probabilities, never certainties. Keep it very simple, very, very easy. Let's actually zoom in like this because we're going to use this information now. All right, now we're in the price zone, right? We're in the price zone, which we identified in advance, right? And you can go back and watch the videos on Jan 13th. I think we did a couple in between, and then there was an entry point. But we're going to look at the entry. So now, because we said we want to wait for, the $6 range, and now we're in that range. And now what we're waiting for here is we're going to move to something called a candlestick, right? Candlestick chart on the top left. The reason being is the candles are just easier to see that each bar represents a day. So when I say one bar or the last bar, I'm referring to this red line and green lines. When it's green, it means it's had an up day. If it's red, it has a down day, right? So we got this really, really clear data. Now, what's scary about this, right? I say scary for people that are untrained is that there's a lot of red, right? Look, I mean, the market, it makes no logical sense, right? The market's moving down. How can we possibly just expect a trend reversal? This is where we need to understand fear and greed, market psychology, buying and selling behavior of mass herd mentality from institutions, from the smart money, but also the dumb money. Dumb money just means people that don't know really what they're doing, just buying based on their fear and greed. That's all baked in, and the fundamentals are also baked in. So now what we're going to do is we're going to ignore all of that, and all we're going to simply say is this, right? We're going to simply say this. Let me pull this back up. And I said this in the video, right? I said, right, this momentum indicator, when the blue line goes over the red line, right? That's how simple it was. When this blue line goes over the red line, what we're going to do is we're going to have an entry order to buy on the next one bar high. And I'm going to break that down exactly what that means. Because this is what you want to do time and time again. And it just was a perfect case study so far. And I'm going to show you how we became risk-free on this exact position. But it's neutral, it's mechanical. We projected this in advance. So now we're going to wait. So if you look at these numbers, let me just do this again. If you look in the left-hand side here, over here, and I just go to this bar, the blue number says 0 and the red number says 1. So it hasn't had a bullish reversal. Okay, and then in the next bar, they both say 0, so it hasn't said it has a bullish reversal. Bang. That's the bullish reversal, right? You see it now? The blue line is over the red. I'm hopefully that's clear, right? The blue line is now clearly over the red. So now what this is doing for us, right? I want you to get to the logic, because then you can become emotion neutral. Like, you're not emotional about winning and losing. You're just literally looking at the mechanics of the price data. What this is telling us is we have reached a particular pattern zone, which is a wave 5 of a wave C of a wave 2, right? We did those wave counts. We are reaching a Fibonacci resistance zone. So a support zone. We're reaching these, retracement zones, which is human psychology. So now there's two things telling us that there's a very high probability trend reversal. But we're saying that's not enough, Jagir. It's not enough. We want a momentum change. The momentum's now moved over. We've had an up bar. And now what we're going to say is we want to put an order in, or only buy if the market enters us into that position. That's what we're going to say. And if it doesn't, that means the market continues going down, and we're not in the market. We don't have to take drawdowns. So this is where it gets just a different ball game now. Different ball game. So we've got the bullish reversal. So I'm just going to get rid of this so we can just see a nice clean chart pattern. I'm going to zoom in like this. I can also now just get rid of this just because I want to illustrate a couple of things, right? So this is what we're saying. We're saying this looks like an end of a wave 5 of a C of a 2 with a question mark. So if this is the case, what would invalidate this being the absolute wave 5 low? Well, what would invalidate the count would be if the price goes below this low over here. I just want to change this to black. Let's go black. Boom, 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 boom. All right. So now I want to take my time on this, because this is what you do. Doesn't matter if it's KDA or if it's another cryptocurrency or whatever it is. This is the logic, mechanical money management, high probability trade entry now. Trade entry. We're focused on the entry. So what we're now saying is, okay, this looks like the trend reversal. So what we're going to do is, rather than just buying, because if we just bought, we might have ended up buying, randomly over here, and the market just came down, and then the market potentially goes back up. Yeah, we're trying to get almost at the bottom, near the bottom. So we said we're patiently waiting for this trend reversal, this momentum reversal, which we now have. So now what we're going to do is we're going to mechanically, objectively say the following, which we did. We did this in advance. You can see back the videos, right? So we're going to play this out. We said, if the price goes above the 1 bar high, which means the previous day, the high of that bar, the market needs to enter us into the market, right? If it continues going down, it doesn't enter us into the market, right? That's what we're saying. And I'm going to make a few notes. This part I want to spend a bit of time on. So I'm going to just write here, entry order. Now, if you know how to use orders on like centralized exchanges, that's where it's most common. This will make sense. Otherwise, you have just a CoinGecko or a CoinMarketCap order, and then when the alert comes to thing, then you just go in and buy. That's what you can do. And then what we're saying down here is this is our sell order. Like, what does that mean? Yeah, what does that mean? If you're not used to this, if you are, then you know exactly what I'm talking about. Also known as a stop loss. Basically, what we're saying here that the thinking is, and I want to just emphasize this. The thinking is, we have potentially identified a major trend reversal, a massive move to the upside with a big project, cryptocurrency project called Kadena, top 100 cryptocurrency, and a potential low. What we're saying, this is what we're saying, this is what I'm saying, is if this is the case, we go, okay, Jigir, if it is a wave too low, what typically happens next? Because we're in this game to make money, right? That's winning, right? And we have to be comfortable taking a loss as well. So when we jump back into the course, and I'm just going to go here, and this is important, right? With Elliott waves, we know what comes after a wave 2. If you can count to 5, 1, 2 is a wave 3, right? And what we want to look at, I want to go into this zone here. Give me 2 seconds. Let's pull this up because I want to show you this because I want you to use it like this. We've got Elliott waves, but we're going to focus on Fibonacci, and we're going to use the advanced section. We want lesson 16 Fibonacci price extensions, right, for wave 3. I'm not going to watch the whole lesson, but basically what this lesson tells us is the following. I'm going to pull it up like this. With Kadena, we're saying it looks like a wave 1 and a wave 2. We've identified this low, and the potential, the upside potential, is this following wave 3. Typical wave 3s are 1.618, which is 162%, to 262%. So we expect this wave 3 to exceed the former high. So now we can measure the potential that tells us this is worth our time. So when I go back into a live chart now, what we're saying, we can do that exact ratio. We're going to measure it, but we'll do it on the side over here. We'll do it over here if it lets me. We're going to measure this wave 1. I'm going to take the closing data. We're going to say this wave 2 low, and the ratios we want is exactly what you saw in the lesson, 1.618 to 2.618. So what we're identifying in advance, the potential. Remember, it's probabilities, never certainties, but this is the game that we're playing. This is the game. This is what we're saying, is there's a good probability, high probability, that if Kadena takes off, the next 2 ranges, one of these 2 ranges it will reach is $43 to $44 to around $68. That's the potential. But what we're saying is, we don't want to wait for the market to be overly obvious that the movements happened, because most of the money's been made. What we're trying to do is almost pinpoint and get in as low as possible and ride the whole wave, right? The trend is your friend. Ride it until its end, until it reaches its bend. But we want to get in at that reversal. So this is next level. Because some people say you can't buy the bottoms and sell the tops. So I go, well, you clearly don't know high level Elliott wave and Fibonacci, because you can. With probability. It doesn't mean we'll get it right every time. But again, I'm going to cover one more thing because this is so important. So important because people miss this. Is just think of this, right? Think of this. What's the risk, right? The risk is this little, the distance between these 2 lines here. That little, it's even smaller than that blue arrow. That's the risk that we're having. What's the potential? Well, the potential is this big arrow, right? So how many times can we risk? Even if let's say the risk was double this, triple this, yeah. How many of these can we risk if we just made one of the blue arrows, right? Well, you can see there's quite a few, right? It's quite a few. So in other words, we're saying we're risking a little to make a lot. I mean, you have to risk something to find out if you're right. There's no free lunch over here. And if there was, I'll take it. But we're going to use something, the next best thing or the next closest thing to a free lunch. That's what we're going to cover today, which is how to become risk-free. So now we're at the stage where we're saying we've identified a high probability setup. High probability. I'm emphasizing that word because I read your comments. I read everyone's comments, and there's sometimes 100 comments per video, and I reply. And everyone's at different levels, yeah, and everything is difficult before it's easy. But some people just don't get the concept of probabilities, even though you're regurgitating my most common quote. Probability is never certainties. So you have to accept that is risk. It's not like a guaranteed game over here. This is not the game that we're playing. If there was one, I've got some other strategies that are used for that reason, lower the risk. All right, so let's stay focused. Right, so we got a bullish reversal. Check. We got pattern price. Check. We've got our entry order in place. Check. We've got a stop loss in play. Check. So we know that's it. All the thinking's done. All the thinking is done. Well, actually, there's one more bit of thinking that we need to do. Before we get triggered into the trade, what I like to do is this. And this is what we're going to focus on today. Rather than counting our chickens before they hatch and really dreaming about that 11x, 12x, which actually risk reward wise becomes more like a 17, 20x because the way we're positioned this trade is what we want to do, and what I do, and I said it in the last videos, is we want to assume we are wrong. Like, Jigir, this looks a really good setup. This looks like a really good setup. It looks like it's going to hit that wave 3 price pattern. It's all textbook momentum. The weekly momentum's up. The daily bullish momentum up. Should we just go all in? I go, no, you risk 3%. There's never an all-in moment, right? It doesn't matter how good it looks. But what we want to do now is we want to ask the question, all right, Jigir, but what if we're wrong? What if we're wrong and the price moves up and then moves back down to lower lows? What's the minimum that the market should do? Okay, is it a good idea that we get risk-free at that point? So even if the market does not unfold as anticipated, even as good as it looks, we still make money. That's the key and that's the secret. So I'm going to do it quite fast. So what we're going to do is this wave C is a 5-wave sequence to the downside. Typically, the market should do a minimum of around 50%. Doesn't mean it's going to, but around 50% that we can expect in advance. So this becomes part of your business plan. The key one we want is 50%. We'll keep it really, really simple. How long does it take? Well, typically, it takes 50% of the time taken to form that wave C. So now we said by 4th of Feb or beyond, the price, if it gets close to $10.70, thereabouts, we want to look to exit half of our position. Really, really important. This is our risk-free money management, never lose money. And again, I cover how to do all these ratios in the course, and I highly encourage you take advantage of this course. It's normally $997. I break it down. Everything I'm going over, step by step, takes practice, like driving a car, but then it becomes second nature, and you'll see these patterns time and time and time again. It's £97, but take my free Elliott Wave and Fibonacci Masterclass, which gives you a real nice high flavor, high level flavor of what this is about. If you like it, buy the course. You get an invite to my private Telegram. We do weekend workshops. We do other things as well. Phenomenal community where everyone's helping everyone, which is brilliant to see. So now what we're saying is, okay, also one last thing I want to say here is what I anticipate and I want to be aware of is the momentum will go up. We'll probably get some type of bearish reversal. It'll go up again. And on the second bearish reversal, it would normally coincide with the minimum expectations. So my business plan is, and I've executed this already, this has been triggered already, is on the second bearish reversal or on the minimum price expectation, I want to trail my stop loss on a 1-bar low. I'll show you what that means in a second. For half of my position, so 50% of my tokens, I want to sell at this zone over here because as good as this looks, I want to guarantee not losing money as close as possible. So my maximum risk exposure from the beginning is 3%, but I'm going to show you in the next few minutes that we are now guaranteed a profit. Guaranteed a profit, even if it tanks, even if it collapses, we're still guaranteed a profit. That's the importance of this. Okay, so we got this now. So now we got our business plan. Now we can play it out. So let me just get rid of this, get rid of this. So we've got a nice clean chart. Yeah, it's all nice and clear. So now there's no action to be done other than just wait until you're triggered, right? So you go, bang, not triggered. Let me just zoom in over here. I'm going to zoom in like this just so we can see it, right? So there's no trigger. You could move your order lower. I personally didn't, but you can move your order lower to the 1 bar high. It would have been a slightly tighter entry. Again, you could do that again. You would have given you a slightly tighter entry. I didn't. And then bang, this wick over here, this line over here is called, basically this just says the day opened, the price opened here, it went as high as this point and then came back here. But this triggered the order, which means we're now officially in the trade and your stop loss is here. Now you've got 3% at risk, meaning if you've got, if it's $100,000 in your portfolio and you're risking 3%, you're risking $3,000 of your capital to make like 50 grand. That's the whole thinking. That's the whole thinking. All right, but there's no work to be done. Your entry order's in play. We've said we were going to wait for, and I'm going to draw this back in again, just so you're clear, a bearish reversal, bullish reversal, and then the next bearish reversal, unless this minimum price zone that we drew in advance is triggered, one or the other, then we'll trail half at a 1 bar low. So we're just waiting, right? So now this is, the order was put in on 23rd of Jan. 23rd of Jan. We've waited 1, 2, 3 days. Took us 3 days. We're talking about patience here. Patience. No rush. There's no rush. It's okay, just patience. Right? So we're triggered on the 26th of Jan. Right? And now there's no work to be done. Nothing. Just wait. Nothing to be done. Boom. 3 days. It was moved up. Nothing to be done. Bearish reversal. So what? Nothing to be done. Nothing to be done. Yeah, we just wait. Patiently wait. Now we've reached the minimum time zone, so we're aware of that. But it's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, but nothing to be done, right? We're about to get the first bullish reversal on the momentum, right? So we go bump. All right, got the bullish reversal, but again, nothing to be done. We haven't reached the minimum price zone. The momentum hasn't done a second bearish reversal, and we haven't been stopped out. So there's nothing to be done, right? And this is important because you just now have to look at the chart maybe once a day, just have a quick check, or set a price alert. And then if the price alert is triggered, you'll get a notification, whether it's email or just a push notification, and then you take action. And then, boom, we had a nice up bar. But now we're aware that we're looking like we're going to get a second bearish reversal, and we haven't reached that. We're in the time zone, but we haven't reached that 50%, right? And now we've got the bar just about to take a bearish reversal, right? So now what we do is this. What we're going to say is we've got 2 stop losses now. It's going to make sense, perfect sense to you. What we're going to say is we're going to move half of our stop loss, half of the position, to the 1 bar low of the previous day. Every time there's a new day, we're going to move the stop loss to the next 1 bar low. And what this is going to do is going to guarantee profit for half of our position. But what we're also going to do with the second stop loss, and what I mean by this is let's call it as let's say you got 10 tokens. Let's just say for simplicity, we're going to use unit 1 is 5 tokens and unit 2 is 5 tokens. Unit 1 is what we're trailing at a 1 bar low. This is our risk management, bag some profits and become risk-free. And the second one, we want to ride for that bigger wave. It doesn't mean it's going to happen. It just means it's highly probable. So now if I just type in, I'm going to do it like this. I'm just going to leave those there. So you got the notes from previous. I'm just going to do it like this. I'm going to call this unit 1. Yeah. Unit 1, which is 50% of tokens. Yeah, hopefully that makes sense. So this is our unit 1 stop loss. And then what I want to also do is make very clear, I'm doing it deliberately like this so you can see it. The business plan is one of 2. You have to decide this. You either say you're going to move it to, you don't need to keep it as low as here. You can either minimum you can put in is, or maximum should I say, this swing low over here, or to break even, right? For this scenario, we're going to use break even. So I'm going to move it just below so you can see there's a separate line there. So unit 2 is break even. So now at this stage, we are risk-free. So we can actually get rid of this stop loss. This one, these are the stop losses now. Both, one position is at break even. So 50% of our position, if it sells our entry point, well, we're 0. But the other one, this one over here is actually above the entry point. I know it's not much, but if we're wrong and we make a small profit, it means we can put ourselves in positions all day long, And if we're not losing money, we can just play out the probabilities. So now we're just gonna do one bar at a time, right? One bar at a time. Bang. All right. So then the market has moved up some more. Now we don't need to really pay attention to momentum. I'll keep it there. I'm just gonna minimize it a bit more. What we're really paying attention to now is this one bar low. Now the thinking is this: probabilities, never certainties. No one knows what's going to happen, just what's probable. What we now know, the information that we have at hand, is we're getting close to this minimum price target. We're getting close to it. But sometimes what happens in the market while we're trailing the stop loss, this is so important to know. We don't know if it's going to happen, when it happens, but sometimes the market just goes a bit parabolic, right? And it happens. We've seen it time and time again with different coins. And by just trailing the one bar low, it means we'll capture that movement. So rather than just saying, right, let's just sell right now, we're at a decent profit. No, that's too emotional. It's not mechanical and it's not repeatable. It's just it's bad behavior, right? It's loser behavior. What we're going to do is just keep it much simpler. We can go next bar, bang. So we got this next bar. I think when this next bar came, it was actually up here. And then I put my stop loss here. And this is a success. We've got stopped out, but it's our profit. We've now made this much profit over here for half of our position, and the risk was initially this much. And then our second unit now. So what we've done effectively, let's just do the math, right? Let's just do the math. Let's just say you bought 100 tokens. Let's say there's 1,000 tokens, right? Let's say that's what your portfolio allowed. And we paid $6, $6 for those tokens. So we had to spend $6,000 for 1,000 tokens, right? And then half of those tokens, which is 500, we managed to sell at $8.72, $8.72 or 73, right? $8.73. So we've now got $4,365 back in your pocket. And you go, yeah, but you get us less than $6,000. I go, I know. But now you've also got another 500 with a stop loss at your entry point, which is $6. Plus the 4,350, I think it was. So we guaranteed a minimum profit of 1,350. Nothing to write home about. But it means we're guaranteed to not lose money. So now let's just wrap up on the rest of the thinking. What do we need to do? All right, so now we're at today's day. I think this is today's data now. Yeah, we're on to today's data. I'm going to go back to a line chart just to keep it nice and clean. We go, well, what's the anticipation? Well, we don't need this no more. We now know, you update your CoinGecko or wherever you're managing your thing. We go, great, this was exited. We're happy with that. Yep, that's fine. We don't need this. We can keep a track of where we entered. The entry position was here, and our second unit is down here. But what we're anticipating, if we look at this price now, what I'm anticipating that's likely to happen, not guaranteed to happen, but it looks like a 1, 2, 3. This is what we're anticipating, 4, 5. Something along these lines. And then what's likely to happen is an ABC correction. And some people say, what'd you get? You're looking to buy and sell, But I go, no. This is swing trading. We are looking to just capture these major swings. The only one that I would really look to sell at is if the price just exploded to at least this point. All-time new highs over here. This zone, wanting to reevaluate if the market is looking bearish. But ultimately, what we're looking for is the bigger move, right? Ultimately, what we want is to now allow that second unit space to either hit these zones, this zone, or this zone. And that might be a few weeks, and you let it ride. And then if you're a bit more advanced, you can actually look for other entry points that add to your position to kind of compound in a certain way. But this was the entry to exit of risk-free, becoming risk-free. So I just want to summarize and then we'll wrap up. I know today was a detailed video, but I think it's important. But let's just quickly jump into the top left chart, which is a weekly. Look at the momentum. The momentum is just turning bullish. So we're anticipating sideways to up for 3, 4, 5, 6, maybe up to 8 weeks of Kadena, right? That's supporting our thesis, our thinking that we could hit that $44 to $68 range. And now, so what we've done today, and we really did some good work today. This is brilliant work. Is wave 1, wave 2. We went back and you can look at the actual videos. We identified in advance A, B, C. Then we identified a high probability setup where our risk was this much to make this much. And we go, great. Then we got triggered into the trade in a mechanical, non-emotional way where you didn't even need to look at the market, didn't need to lose any sleep. Went great. We are now risk-free. So if the market tanks, let's just say this happens, right? Let's just say that happens, right? Well, we now have protected ourselves from the downside that we're going to make 1 to 3%. 1 to 3% of your entire portfolio, whatever that size is, and you can kind of work out on a monetary basis. But this is such high level, this is the art and the science of trading. Now, we're not, this is not where the probability states. How I think about this, I want to get this across because the probability is never certainties, and it's a bit annoying when people just don't get it. And I'm trying to go, but I'm annoyed at myself because I'm not making it clear enough. So I'm like, how can I make this clearer? Right, so we're playing a game. I'm going to play this game with you. Let's play this game. This is the game. This is the game. You're going to be so clear on this after I show you this game. All right, we got, a die, right? A die. I used to call it dice, but when there's one singular, there's die, number one, 4, and all the rest, right? A die, right? And we can roll them, right? If you get the number 1, 2, 3, 4, or 5, which is a 5 out of 6 probability of happening, 5 out of 6 probability of happening, you win. Yeah. And if there's the number 6 gets rolled, which is a 1 out of 6 probability, you lose. All right. Well, which bet are you going to take? Well, I'm going to take the 5 out of 6 all day long, right? So that means 5 out of 6 is high probability, very high probability. It's what is that in percentage terms? Percentage terms, 5 divided by 6 is 83%, right? I'm taking those odds all day long, all day long, all day long. But does it mean that we can't lose? No, there's a 1 out of 6 chance. There's a 17% chance that we are going to lose. But when we lose 3%. But when we win, like big time win, we have a break even or we make 50%. Yeah, that's the thinking. That's what I mean by probabilities, never certainties. So with this trade, it might be a 4 out of 6, 4 out of 6 probability of it going our way. But now we're guaranteed a profit. Now we're 100% guaranteed a profit. Okay, it might not be the major profits, but we're guaranteed a profit. And that's what we're looking to do is probabilities, never certainties. Assume we're wrong and do it as we're doing it over here. Hopefully that made sense, right? Because that's how I think about it. That's the lesson I'm trying to get across. Is probabilities. We're identifying high probability setups. We're waiting for weekly momentum, daily momentum, both to point up because we know the trend is your friend. Ride it until its end, until it reaches its bend. We know Elliott wave patterns are powerful, especially when there's 2 or 3 degrees of counts. Here we got a 5 of a C of a 2, so that's 3 degrees of counts. We know Fibonacci price ratios are incredibly powerful, especially when it's retracements, external retracements, and extensions or alternate price projections. And when they cluster, that's really, really important, really, really powerful. There's other things we can add to the equation, but that's more than enough. More than enough. Then we have a high probability entry strategy, which is 1 bar high, bang. And then we have a high probability risk management strategy, which is here's the minimum. Let's get risk free at the minimum. When we've done this already, we're now risk free in a mechanical, objective, non-emotional way. And if you want to learn how to read the markets like this, it's so important. Just take the free Elliott Wave Fibonacci Masterclass. It's free. I break it down. If you like it, buy the course. Get invited to my private Telegram. We do weekend workshops, and we're looking to do a lot of things in 2022. So anything else that I want to cover? No, that's it. Simple. We covered this, Now, there's no work to be done until the weekly. I want to now give the weekly momentum space. There's 2 that I'm aware of. There's 2 indicators. There's the 8 and the 13. The 8 moves faster, but you can see even the 8, which is the top one. Look at this. It's gonna take around 1, 2, 3, 4, 5 weeks before this blue line, 3, 4, 5 weeks before this blue line gets into the what's called the overbought zone. So I go, there's nothing for me to do other than set a price alert. So we can do that. We can do that in TradingView. You can do it in CoinGecko. Let's do, well, I'm going to set it as this, right? We can set this as a price alert, or we can set it at this level. As right click, add alert, yep, create. And you'll see there's an orange line that appears. And what the software does is connect to my email. If the price goes here, I'll get an email. I'll also get a push notification in the software that says your price alert has been triggered. And then I know there's some action to be taken. But that's it. That was the art and the science of KDA, but more importantly, risk management. How did you find that? How did you find that? We broke it down. That was because I wanted to just really get that across, because if you can do that time and time again, you're going to stack the odds in your favor. And you might not want to do it because you might not be a trader, but you're buying crypto, but you can take some of those elements and some of that thinking, say, how can I use that for my low caps when there's no stop loss available? How can I use that for this? How can I get some more strategic? How can I get more mechanical, more business-like, more objective, as opposed to being this wild individual, this kind of like, when the market's going up, is euphoria. When the markets are going down, it's like depression. And this roller coaster. It's just not healthy. All right. So like, subscribe, hit the bell notification, take the free Elliott Wave Fibonacci Masterclass. I want to read my quote. Oh, here we go. Just seeing where my book is. All right, here we go. All right, it's the repetition of the mother of all skill is repetition, or repetition is the mother of all skill. So we're gonna repeat. Understand money. Chapter 2 says rule number 1: never lose money. Rule number 2: never forget. Rule number 1: Warren Buffett. Now we did a practical version of that today, because sometimes that's all well and good, Jigir, but how do we do that in practical, in reality, in the real world, when the markets are moving up and down? Well, now you've seen an objective, mechanical way where you can do this. What to also keep in mind, we'll finish with this, with low caps, with IDOs, they do apply. Elliott Wave Fibonacci applies incredibly well, but they just tend to be a bit more volatile because they're younger. It's almost like they're more emotional, right? More emotional beings are involved, and they only take a small amount of volume to move the market. But as it matures, you often find a 5-wave pattern unfolding. And then there's normally a big correction, and then there's normally a second leg. And normally when the big correction occurs, that's where the fear, uncertainty, and doubt is huge. The project's over, it's dead. People misunderstanding what a rug pull is and saying it's a rug pull. And I'm hearing all types of things, and I just ignore the noise. And I go, people just don't understand human psychology. And more often than not, there's a second leg. And if that second leg breaks down to a 5-way sequence, and you can identify that in advance with high probability and objectivity, with being mechanical, you can then set your price alerts and exit at 1 bar low. Or if there's not that trigger in play, you can either set a price alert or just have your hard exit point. It's just like, boom, it's hit $50 and that's 100x for you. Bam, I'm just going to exit, and you're happy, and you got that in play. So if you got that edge in your favor, you're likely to win, because what you want to just really understand, it's a zero-sum game. We have thousands and millions of players, and everyone's looking to win. But for there to be winners, there has to be losers. For a football match, for it to be a winner, there normally has to be a loser unless there's a draw, and it's unusual for it to be a draw because there's so many players in this game. It's more like tennis. Has to be a winner, has to be a loser. And we're playing tennis, it's crypto tennis, and your job is to win, train, get the edge in your favor, see what other people can't see. So you're 2 steps ahead. Most people are actually 2 steps behind, buying late and selling early. We want to buy early and sell late, which is in the sense of the top of the market. So there you go. Like, subscribe, hit the bell notification. Today was a powerhouse one. Share it. Go over it again. It was detailed, but save this one. Because when you see this happening, it's just a good reference point to how to identify in advance, put the order in, get risk-free, and we'll see how the second position plans out. Let's see if we get stopped out, take a small profit. If it really plays out, then we take a large profit, and we just rinse and repeat for other positions. I'm neutral to KDA. It's purely technicals, very little on fundamentals, pretty much zero on fundamentals. So I don't really care what's happening fundamentally, to be totally honest. From the business plan perspective, I'm just looking at momentum, pattern, price, time. That's it. I'm done. All right. Have a great day. I'll see you soon.